So I want to explain how I got this buying setup from this particular zone, and we are headed to breaking the highest high that gold has ever broken. So from the CPI day, price reacted from the last strong demand zone, or rather the area that we had a lot of liquidity to push price to the upside. And if you look at 30 minutes, price, first of all, um, the last zone that has not been mitigated is here. Probably market will be coming here soon. And now, if you look at what happened, price formed first liquidation, tried to come back to this zone, went, formed another liquidation, and then price went, formed another area, another area. This was the last unmitigated liquidity zone. So what was happening? The market was reacting from this area of liquidity. Then what happened? Price again went, broke that zone. That means buyers were still in control, and the market came to react at this particular area of liquidity. Are you guys following now? Then later on, the market came back, reacted. I think this was during the London session. I had someone who took this trade here, collected a few pips and left. So, and then again, price came back now to consume the left liquidity that was at the zone of impure, the impure zone, right? Now, for you to get a better confirmation, what do you do? If you check on, in fact, if you check on 15 minutes, but I prefer confirming with the 5 minutes. If you check on 15 minutes, let me show you, sorry. Let me show you. If you check on 50, okay, first of all, let's go back to 30 minutes. So if you check on 5 minutes, so this is our area of interest, right? So let's go to 5 minutes. On 5 minutes, we can clearly see that we had an impure zone. We had an impure zone. Let me show you. We had an impure zone. I'm talking about an impure zone. It's an area where we had liquidity and imbalance candles or imbalance candle at 30 minutes. So which is this particular area? See, so if you look at the liquidation process from here, yeah. So this was the last area that was left, and we don't have anything at the bottom. So where do we have prices not yet mitigated? It was just at this particular area where we had a lot of touches. So initially the market came, reacted and went, but we had unfinished business at this particular area. So when the market just if you want perfection, but sometimes you avoid this because if you don't avoid it, you might lose, you might miss an entry. So if you just use the 5 minutes, okay, let me first of all, if you use 15 minutes and you put your line at the wick of the last bearish candlestick, you could have last bearish candlestick, you could have your entry there at around 29.07, and maybe you could have an SL of around how many pips? Let me show you. You'll have an SL of around 48 pips. But as far as I'm concerned, let's tell you guys, an SL of around 20 pips is not bad. So if you use 5 minutes for further refinement, so that we have a little risk with high reward, you look at the last area, that zone, where do we have the last liquidity that has not been fully mitigated. So if you put your line here, then you put your entry at the last zone that we had liquidity. We had sellers, it's there. But for better entry, you just align all the touches at this particular area. Realize what happened. The market came, tapped, and the market tapped where we had an area of So um, what happened? The market came, tapped this zone. Then after tapping the zone, price has gone over 250 pips. So if you go to 30 minutes, you can clearly see that we have had price has broken. Sorry, let me see. Price has broken. The moment the market, you need to understand these guys very well. The moment the market broke this high, I knew we don't have any other business coming down. So what was going on? Market is aiming to react on that particular. The reason as why price is reacting right now at this zone, it's because we had some we have some uh, sellers momentum that was from this area. But whatever is happening is just a slight liquidation, and then probably price is going to do what? To take out that high, and then now from there we'll be looking at the next move for gold, either to the downside or to continue pushing up. So I think from this you'll be able to learn and understand the impure liquidity. If maybe market drops, probably we look at the last area that we have. We have this an impure. First of all, we have the candlestick. We have the imbalance liquidity candlestick, and then we have the unmitigated zone. If you go to 5 minutes, let's check if you can get something. If you go to 5 minutes, let's see if you can get something to give us an idea of what you can do. First of all, let me mark that on 30 minutes. So we have these and we have these. So let's go to 5 minutes and check out what is happening. Wow. So if you check on 5 minutes, the last the last untested area is in fact price broke this zone, then went up. So which means if the market has to come and we need to look for more orders, guys, you need to understand the liquidation process. It's very, very important. So before this momentum, we had some sort of liquidation here. Then market came, took all the liquidity that was left here, consumed, then went. So if the price maybe comes here for other, we have to observe what happens later in the day, maybe during the New York session. We could probably get more entries here before the market goes on, if it will come the way down. So if it come all the way down, we should align at what is happening here. But if it doesn't come, just wait for price to break the high, and then you'll be able to get more entries. But since this has been broken, but in case price comes here, we'll be looking for more buys go up. But if it doesn't, we wait for it to break the highest high that we've had, and then from there we'll be able to plot the next direction of gold. I hope we are getting the concept. So I've recorded this just for the purpose of learning, so you can go watch it and watch it. Then the other videos, I'll be uploading them later on the drive so that you guys can have access to them and have better experience in learning and applying as you practice and apply them in our sessions. You guys have a lovely weekend, and let's keep on learning, back testing, and journaling our trades for better performance. Cheers.